Welcome back to Pensioners Corner, where we break down important topics that matter for everyday life in the UK. Today, we're diving into something that touches almost every household: council tax. No matter if you own your home, rent from a private landlord, or have just moved into your first flat, council tax is something you'll come across. It's a regular yearly charge paid directly to your local council, and it plays a huge role in keeping communities running. Now, many people think of council tax as just another bill, but in reality, it's the backbone of local services. The money raised doesn't disappear into a central pot. Instead, it funds things we all depend on, like rubbish collection, street lighting, libraries, maintaining local parks, supporting schools, and even contributing to emergency services and road repairs. In simple terms, when you pay council tax, you're investing back into your local area. The way the system works is linked to property values. Each property is placed into a band based on its value at a certain point in time. The bands usually range from A, which covers lower value properties, up to H or sometimes I in certain areas for the highest value homes. The higher the band, the higher the bill. It's structured this way so that people with more valuable properties contribute more, while those in smaller or lower value homes pay less. Generally, the people living in a property are responsible for paying. That could be the homeowner or the tenants, depending on the situation. For many households, it's an unavoidable part of the budget, something you have to plan for, just like utilities or rent. But there are some important exceptions. Discounts and exemptions exist to help groups who might otherwise struggle. For example, people living alone get a 25% discount. Full-time students are usually exempt, and certain groups, such as people with severe mental impairments, may qualify for further reductions. These rules make sure the system is fairer and takes into account personal circumstances. Of course, like any bill, missing council tax payments has consequences. Councils can issue fines, take legal action, and in some cases send bailiffs. That's why staying up to date with payments is essential. At its heart, council tax is about community. It's the main way councils raise money to look after residents and keep local areas functioning smoothly. Services like social care for older people, youth programs, leisure centres, and community support depend heavily on this funding. Without it, many of these services simply wouldn't exist. This brings us to a major change currently unfolding in Conwy, a county in Wales. Starting in April 2026, Conwy Council is set to introduce a significant new policy, a 200% premium on council tax for second homes. In simple terms, if you own a second property in Conwy, you'll soon be asked to pay 3 times the standard council tax bill for that property. Let's look at an example. Imagine a Band D property, which typically has a standard bill of around £2,333 per year. Under the new rules, the owner of that second home would pay an additional 200% premium, taking the bill to nearly £7,000 a year. For those with properties in higher bands, the costs rise even further. A Band F home could see bills over £10,000, and for the very top bands, charges could exceed £16,000. The aim of this policy is straightforward. Conwy, like many areas, faces a housing crisis. Rising property prices and a shortage of available homes mean that local people, especially younger generations, struggle to find affordable housing. Second homes and holiday lets, while valuable for tourism, have reduced the number of houses available for permanent residents. By increasing the cost of keeping a second property, the council hopes to encourage owners to either sell or rent them out, freeing up homes for locals. The Welsh Government has given councils the power to introduce premiums of up to 300% on second homes. Conwy's decision to set it at 200% places it among the strictest in the country. This move targets furnished properties that aren't someone's main residence, such as holiday cottages or weekend retreats, but not primary homes. Reactions have been mixed. Many local residents and housing campaigners support the change, saying it's a necessary step to tackle the shortage of affordable housing and protect the community for future generations. They argue that communities thrive when homes are lived in year-round, with permanent residents supporting schools, shops, healthcare, and local services. On the other hand, second homeowners often feel unfairly singled out. Some say they contribute to the economy by spending money locally when they visit, supporting shops, tradespeople, and restaurants. Groups like the Taxpayers Alliance have even described the policy as an unfair cash grab that risks damaging tourism. The potential economic impact is uncertain. If second homeowners sell up, local spending from these visitors could fall. Businesses that rely on seasonal tourism like cafes, holiday attractions, and trades working on property maintenance might lose income. Critics also argue that selling second homes doesn't guarantee they'll go to local buyers. Investors could still step in. Supporters of the policy counter that permanent residents bring steadier, year-round economic activity. Families living locally shop regularly, send their children to local schools, and use local services consistently. They also highlight that if fewer homes are used for short-term holiday lets, more opportunities open for hotels and B&Bs, which employ local people directly. There's also the question of how the extra revenue will be used. Councils are expected to reinvest this additional income into the community, potentially funding affordable housing schemes or strengthening essential services. If that happens, it could help balance out some of the concerns about lost seasonal spending. Still, the shift will be dramatic for many homeowners. For families who saved over the years to buy a second property, whether as a holiday retreat or a long-term investment, the sudden jump in annual costs will force difficult choices. Some may decide to sell, while others may struggle to keep up with the higher bills. For a family who only uses their cottage a few weeks a year, paying thousands of pounds more could be difficult to justify. This policy highlights a wider debate happening across the UK, how to balance the needs of local communities with the pressures of tourism and investment. Areas with high numbers of second homes often face the challenge of empty streets in winter and overcrowding in summer. While visitors bring in money, too many second homes can reduce the availability of housing for permanent residents and push prices out of reach. Looking ahead, the effects of Conwy's decision will be closely watched. If the policy successfully frees up housing and stabilizes communities, other councils may follow suit. But if it causes economic disruption without solving the housing shortage, it could spark new debates about the best way forward. For now, second homeowners in Conwy face some big decisions. Do they keep their properties and pay the higher charges, sell and move on, or find new ways to use them such as letting them out long term? Each choice comes with its own challenges. What's clear is that this change represents one of the boldest steps taken by a UK council in recent years. It reflects the growing urgency of housing pressures, not just in Wales but across the country. At Pensioners Corner, our aim is to keep you informed about changes like this that could affect communities, families, and future generations. Whether you see this policy as fair or unfair, necessary or damaging, one thing is certain: it will reshape the housing landscape in Conwy and perhaps beyond. Only time will tell whether this move brings the intended benefits, but it's a reminder of how closely linked our homes, our bills, and our communities truly are.